How do you see technology shaping the future of commercial real estate?
The question is, how do you see technology shaping the future of real estate? Well, I actually had an older podcast where I talked about how AI would be used on fast food, order taking, and robots taking deliveries to different people, especially in urban settings. So that is what I think how it would be affected, is by AI taking orders. And to be honest, it may go to the next level where you may have robots doing some of the work of fast food workers inside the restaurant.
Salim Development Group.
Thank you everyone for joining me for this week's podcast. I am Tahir Salim, your host, CEO of Salim Development Group. So I want to talk about the biggest mistake. The biggest mistake was when I gave personal guarantee and other corporate guarantees for a loan I was getting for another project. So the new project that I was doing, I had that project giving a guarantee, I was giving a personal guarantee, and all the other businesses, which are under different corporations, they were giving a personal guarantee. That was a tremendous amount of risk for benefit of just one project. I shouldn't have done it. Thank God it turned out okay at the end, but I shouldn't have done it. I did all my development. Next thing I want to talk about is something that's very important. I've picked bad location before, although most of the locations we picked have been extremely good. There was one location that was very poor location. Not only did I lose money in the business, when we sold it, we had to lose money in the real estate as well. Whoever would take over that business would not be able to pay the rent, so the rent had to be lowered, which meant the price of the real estate was lowered, and I had to sell that at a huge loss. In the future, I want to make sure that I only not pick great locations. So now I'm going to talk about overcoming some of the setbacks, and I want to talk about a couple of them. One of them has been we picked a location, or I picked a location. It didn't do as well as I expected to do, and the sales were lower. Obviously, the bank payment still had to be made. So we made adjustments. That was the key thing we did, was we made adjustments. Talked to the franchisor to reduce the hours because business was slower. Normally, we close the business at 12, and we started closing it at 10 o'clock because the people weren't showing up after 11 o'clock or 10 o'clock. So we reduced the hours and taking 2 hours a day per person, total of 4 hours a day for two people, times 30 was 120 hours, times $20 an hour average. That ended up being almost $2,500. Then we also made adjustments in utilities, and we made adjustments in our food, the way the food was prepped. Normally we had extra food left prepared early, but we started making food per order, making small or slight amount of difference, lowering the cost there as well. Change the temperature setting of the air conditioning from the 75 or 74 degrees to whatever was recommended by Southern California Edison to like 78. Also being conscious of other utilities. Anyway, so we were able to bring the cost down by $3,000 to $4,000 a month, and that was the difference that was needed. In fact, we actually became cash positive after making some of these changes. So having to adjust for a business that doesn't do as well as you wanted, as well as you anticipated, is very, very important that you can develop. Second thing I also want to mention is we could have taken money from another business that was making money and put into this business, and that would have been fine. But I have a philosophy that each one of your business should be in the black and not pulling money from another business. So I'd rather have two businesses that are making $5,000 each than one business that's making $10,000 and the other one making zero. Even though it seems like it's the same amount of profit overall, but I don't like the mentality we're losing any money in any of our businesses. So anyway, that's a mindset I try to project to our employees, to our management, and to our team. So one big mistake I made once was I invested a lot of money where I was the investing partner and I was not the operating partner. That has only happened once. Usually I am the operating partner, but in this case, I was the investor. The big mistake was that I did not think about how good this person was in terms of operations. I looked at their spiel and I did not look at their record. Anyway, bottom line is I lost over $300,000. And I can tell you that if you're investing, you need to vet the person you're investing money with, not just the business, how good that business is. If the person you're handing that money to is not very competent or is not honest, it doesn't matter how good the business is. It will not succeed. So I guess the game-changing insight I want to tell you is when you're evaluating a potential business partner, you want to look at, are they competent? And you don't want to look at what they're saying, or you don't want to hear what they're saying. You need to look at their history. What projects have they done? What were this person's responsibility? So they could have been a partner in another company where they tell you that they ran that business, but they didn't run that business. And you find that out later on when you make them a partner or you're their partner, that this person just talked big game, didn't know what they were doing, and got you to invest that money. So competency and verifying the competency is critical. Second thing is honesty and ethics. If the person you're working with is not honest or doesn't have the proper ethics, then one day that's going to go against you. So you need to partner up with someone who's honest, has really good ethics. Hard work ethic. You will hear a lot of people talk about working hard. Talking about working hard and working hard are two completely different things. 95% of the people will talk about working hard. I would say maybe 20% of the people, maybe 30% of people actually work hard. So please make that distinction and try to vet or verify, is this person talking about working hard or is he actually a hard worker? Big difference. The last thing that's, again, goes along with the other things I talked about is history of success. The people who are very successful, they have a lot of prior history of success. If someone has mediocre success in their past projects, they're probably going to have mediocre success in the venture they're doing with you as well. Also, a lot of people will fluff their past projects in order to get new investors. You need to look at the tax returns and all the documentation in great detail. And if the people who are trying to work or make you into a partner are not showing that information to you or are not able to explain everything in detail, then you need to walk away from that deal. One other thing I want to talk about that's very important is having professional help. The best time to have an attorney is when you don't need one. So if you hire an attorney to go over the documents, that once you go over all the documents, once you've done all the things that you need to do, and if there's any agreements that are very critical, it's very wise to have an attorney look at it. Still, you need to make those decisions of what are the deal points. So if an attorney's trying to make the decisions on your behalf, they shouldn't. You should make those decisions, but an attorney should at least give you a legal advice. So going along with attorneys, just as attorneys can give you a really good advice on a legal standpoint, a business mentor can really give you very good advice on the business side, the real estate development side, and administration. So I think getting a mentor, whether it's on the legal side or the business side, is very, very helpful. It could save you so much grief, and it would absolutely be worth your time to find the right mentor. Okay, guys, last week we had a poll and we have a couple more questions from the audience.
Can you elaborate on a specific mistake that you made in your real estate career and how it turned into a learning opportunity?
So the question was, can you elaborate on a real estate mistake that turned into a learning opportunity? The answer is yes, several times. One example I'll give you is that a deal we made had a buyer was able to buy back our property if we did not develop it within a year and some months. That became very problematic, and because the development entitlements took longer than a year and 3 months. So that person or that entity had the right to buy our business, our real estate back, and they tried to actually, and we had to negotiate with them. So the key was that we should always be very mindful of how a purchase and sale agreement was written, and all the very small details which may be irrelevant at the time may become very important later on. And how that became a positive point for us was it made me hurry up and get financing going and try to get the other project started. So we made the best of it by getting the project done or started sooner, because there would have been other consequences.
How do you balance the financial aspects of sustainable development with long-term environmental considerations?
So the question is, how do you balance basically environment with long-term business consequences? And it's very clear. If we are spending $100 on a green energy project, we should be getting back benefit minimum of $100, preferably more.
How do you see technology shaping the future of commercial real estate?
The question is, how do you see technology shaping the future of real estate? Well, I actually had an older podcast where I talked about how AI would be used on fast food, order taking, and robots taking deliveries to different people, especially in urban settings. So that is what I think how it would be affected, is by AI taking orders. And to be honest, it may go to the next level where you may have robots doing some of the work of fast food workers inside the restaurant. So I want to basically summarize on what we talked about today. We talked about the big mistakes I've made, how I managed to work through those mistakes, and the lessons learned. So we talked about those. Thank you for joining me for this week's podcast. I'll see you next week. Please follow me on social media and join me on my Discord channel. Click the link in my bio.
Salim Development Group.